Welcome back to the Investor Professor Podcast. This is Dr. Ryan Peckham, and this is episode 22. On today's podcast, we're going to go over the slew of earnings that we've already had this earnings season. We'll talk about some of the companies that have already reported. We'll talk about companies that are coming up this week. We got a big week ahead for corporate earnings. And then we're also going to talk about paying the price, not just the price for stocks. We're talking about paying the price for your goals and the things that you're working towards and what it takes in order to be able to achieve those. So I hope you'll join us, and I appreciate you coming back. And as always, let's get to work.
You dropped this.
Well, welcome back to the show, everybody. Thanks for joining me once again. And I'm going to go ahead and get this out of the way up front, not forget this time. But please remember, this is for entertainment purposes only. I am not your financial advisor. So please consult your financial advisor before making any decisions, and don't trade based on solely what you hear, all that kind of stuff. Past performance is not indicative of future results. So with that being said, got a lot of earnings stuff to get to. Got a lot of good feedback from the interview last week. I know those of you listening enjoy the interviews. I'm working on some more. Those are always fun. A little bit longer, but when they're going well, there's always good content to bring you. So looking forward to doing that on a number of different topics that I think you'll really enjoy. So with that being said, let's get into some of these corporate earnings. So we are in the middle of earnings season, comes around every 3 months. So I guess this will be a trend for us, but it is important because it gives the market kind of direction. What are companies seeing out there? In between these earnings seasons, you get a lot of the political stuff starts to headline the newspapers, and companies are just kind of doing their thing, and it's just kind of hearsay on how they're actually doing. And so when they report earnings, the market takes notice, and you normally kind of get your cues on what's going to be happening. So I apologize in advance. You're going to hear some clicking. That's me looking these stocks up as we go here. But one of the first ones I wanted to bring up is Snap, right? Symbol SNAP, Snapchat, parent company for Snapchat. But they just got absolutely just a brutal drop when they reported their earnings on Thursday night. They dropped 26% on Friday, and that's a massive move for them. So they went from, let's see, what was it, $77 down. They closed at $55. So you'd have to go back to May 10th of this year to get them around that price. And so for Snapchat, one of the biggest problems is that Apple changed their rules as far as being able to track people, right? So you've probably noticed with some of the new app updates with Apple, it starts asking you, do you want to allow the app to track you? Well, that data is then used by these companies, right, to go to marketers and people that they're selling advertising to and saying, hey, if you want the demographic that's, females or males between the ages of 14 and 26, this is right in our hot spot, right? That's exactly where we're at. Well, not being able to track that kind of data has definitely impacted Snapchat, and I'm sure a lot of other companies. So that's why you saw some of the other companies that are kind of in that space. They also sold off on the news that of Snap's bad quarter. And so this will probably be something that, eventually is going to get worked out. It's going to be too big of an issue to too many companies for something not to get done, for there not to be some kind of change in that space. So if this is a company that you're interested in, you should probably go take a nice hard look at it. It could be an opportunity depending on your time horizon and if you really enjoy the app. The other one that was pretty amazing quarter was Tesla. Tesla crossed above $900 for the first time. And I always like to tell you when I'm wrong on here. And I have many students or previous students who love to call me out on how I said in class at some point that Tesla was not a good investment. And that's, on paper, it didn't. It's starting to look better now. But, Tesla had their most profitable quarter that they've ever had, more vehicle deliveries. They're starting to open these plants in other parts of the world. They're starting to benefit from scale because of that. And so things are looking better. I will be the first to admit it. I did not realize that Elon Musk can work 84 hours in a day. Okay, I did not think that was sustainable, but apparently that guy just doesn't sleep and outworks all of us. It's just pretty tremendous what they've been able to do. And even with all the competition, right? I mean, you see all this competition ramping up for electronic vehicles, and the way that the culture looks, I mean, people that want electric vehicles want them from Tesla. And so that'll be interesting to see how that plays out. But, this quarter really pulled Tesla up for the year. So on January 4th, the first trading day of this past year, Tesla was at $880. And so they have not, if you've owned Tesla all year, you haven't had a really great year. I mean, they have trailed the market the entire year. The bottom would have been around $580 back in May. So they went from $880 down to $580, and now they're back up to $909. So that's a pretty tremendous swing. But when you look at, the huge gain that they had last year, normally when stocks have this huge of a gain, it's not unlikely for them to sell off a little bit because of, individuals taking profits or investors taking profits, things of that nature. So the fact that they dropped and have come back and their quarters have still been good and tremendous, it really goes to show you that they're doing something right over there for sure. So I was wrong on that one. Former students, clients, I apologize on that. So the next one that we're going to look at is Netflix. So Netflix, obviously the huge super hit Squid Game. Have I watched it? No, I have not. I have not watched it yet. I'm too much of a nerd. I'm doing numbers. I'm reading stuff. I have not watched Squid Game, so maybe I need to jump on that train. So the big key for Netflix, though, is, subscriber growth, right? So that's kind of been the thing that people or analysts have been looking at. They added 4.4 million subscribers this past quarter. That brings their total up to 214 million subscribers worldwide. So I'm not sure how much that can continue to grow, but obviously you think about pricing power. You think about a company like Netflix, 214 million subscribers. If they raise the price of a subscription by $1, I mean, it really impacts them a tremendous amount, right? So, we'll see how much more they can scale. But Squid Game has really done just a tremendous job of helping add, international subscribers, tying them in. It's a really interesting story if you want to go read about it. But the creator of Squid Game, he basically shopped that series or whatever for 10 years before getting it made. But because of that, Netflix is also at an all-time high, $664 a share. And, talk about going back in your time machine. I remember when they messed up years ago, when they went from DVDs to streaming, and everybody was like, oh, you just ruined your business, and the stock sold off tremendously, and I should have just backed the truck up. But shoulda, coulda, woulda. Not an earnings call, but PayPal made news this week. PayPal looking to buy Pinterest. We'll see if that, what comes about on that. The market not necessarily sure up front what that's going to look like or why they would do that. So PayPal sold off a pretty good amount this year. They haven't reported earnings yet, but they did drop from $271 all the way back down to $240. So that's a big move for them. The market at the time, right now, not really understanding what the synergy is going to be between Pinterest and PayPal. It could be maybe processing all the payments, and we'll just have to see. Neither company has said anything on it, obviously. So it's one of those things where we'll just have to have to wait and see. Personally, I like PayPal. I'm not sure how this is really going to work, but I'm interested to see what it's going to do and see how it could actually impact the company going forward. So that'll be more of a wait and see on that one. So this next week, pay attention. We're going to have a lot of big companies reporting earnings. You're going to have Apple and Amazon and Facebook and Google, and a lot of these companies are coming up, going to be talking about their earnings. If you look at a company like Amazon, Amazon is another one that so far this year, they haven't had a great year. The S&P 500 is up 20%, maybe a little above 20% right now. And you look at Amazon, and it's only up about 4%. So labor costs, well, it'll be interesting to see how much labor costs are impacting them, the number of people they have to hire for this Christmas quarter that we have coming up. So all those things we'll be looking for. Apple and Google have announced that they're going to change their fees for apps that are on their platforms. And so what impact will that have on their profitability going forward will be just a couple of the things that we need to pay attention to this week coming up in the market. And believe me, I get it. Talking about company earnings, looking at this stuff isn't the most fun. It's not the most entertaining. I totally understand it. Everything that I read is all about the supply chain. How is it going to impact companies, right? So I try to find the stuff that I think might be useful for you. But you do have to stay up to date. You got to be able to, you got to know what's going on. A lot of times people look in their investment account, can't figure out why their stock is down or up or what's going on. And normally it's related to company earnings. So, the second half of this episode today is about paying the price, right? And so when I'm talking about paying the price, not just obviously investment wise, kind of a play on that, but paying the price to do the things that you want to do, to have the discipline that you're going to need to have to be able to create the life for yourself that you want to create, right? And so when you look at paying the price, I think about there's a lot of things that have happened in your life that you can't change. You can't change where you're born, can't change a lot of the things that happen when you're young. But at some point, you got to start taking responsibility for your life. And I have so many students, younger people, that come up to me and say, "Well, my parents never invested. We never talked about investments. We never talked about saving money. We never talked about doing any of this. And so, how am I going to do it?" And so, if you want to change your family tree, if you want to make your life different, then somebody in your family is going to have to pay the price for that. Somebody's going to have to say, okay, this is going to get better. The decisions that I make, not only do they impact my life, they impact my kids' lives, and they're going to impact my grandkids' lives, people that you don't even know yet. Okay. And then there's the other side. I've talked to, there's the other side of the coin, which is families that have been super successful. And then the kids are, come to me and go, "Man, I don't want to mess it up. I don't want to be the person that my family remembers as the person who messed up the good thing that we had going." Because I've seen both sides of the coin. There's, the individuals, the investors that want to be the ones who build the family up and change their family tree and be the one that is kind of the beacon for the family. And then there's also the pressure of on the other side of, "Man, my family's doing great and I want to make sure that I keep it going." Because one of the things that always shocks people who start making a lot of money or start investing is it takes a lot of time and effort. There's a reason that you see all those articles where, you read about somebody who made a lot of money and then you read about how they went bankrupt. It takes a lot of effort to keep it going. It's not just something that you make a lot of money and you're just on easy street forever. It takes a lot of time and effort and making sure that you set things up properly. So, there's hard work that has to be done on both sides of the coin on that. So there's a lot of things you can't change. And if you sit around thinking about all the things you can't change, well, that's not going to be very helpful, right? So you got to start thinking about the things that you can change. There's a lot you can change. You can change your habits. You can change what you watch. You can change what you read. You can change how you spend your time. You can, all of those things. And once you start changing those habits, as we have discussed, everything else changes. But it takes a little bit of time, and you got to be able to, just trust in something. You got to trust in something that it's going to be able to happen for you. Like, I can't go to the gym 2 days in a row, look in the mirror and go, man, I thought I'd look like Arnold Schwarzenegger by now. What's going on? Why is this thing broken? Right? So if you change those things, everything will change. And I know these are topics that I have discussed. I know that we have gone over these in other podcasts. But the thing about it is most of the time you got to listen to something 7 times before it starts to stick. So these are concepts that I have to continually remind you of because it's important. I want this to stick. And I have listeners who listen on twice the speed. So I don't know if they're picking everything up. Hi, Maddie. So this twice the speed, we're trying to, get through content as fast as possible. So you have to think about those things. It does take time. And the truth of the matter is that most of us overestimate what we can do in a year, and we underestimate what we can do in 10 years. But the things you do today are going to determine what your life 10 years from now looks like, right? The habits, the disciplines, the decisions that you make, that's what's going to determine what your life looks like 10 years from now. So don't just float. You can't just float through life. I mean, you gotta pay the price. You gotta be willing to put the time in and pay the price on your health, on your wealth, on your mental toughness, all of those things. And Jim Rohn was the first person I ever heard this from. But he always said, you gotta work harder on yourself than you do on your job. You gotta work harder on yourself. And it's just the number one investment principle too, right? You gotta pay yourself first. If you say, I'm going to save the money that I have at the end of the month, it's not going to happen because we all spend what we see. And, you got to pay yourself first. So every single time you get paid, you should say, you know what? I'm the one who worked for this. I should put some money back. I should invest some of this money. Right? So every single time you get paid, pull some of that aside. Because the more money you make, the more you'll start pulling aside. And you'll realize, as many of you have, if you don't take care of yourself, nobody's going to do it for you. The companies you work for, the big businesses that you work for, they're not going to take care of you. You have to take care of yourself. You have to be the one who's going to be responsible for your retirement. You have to be responsible for your life. There's no, you got to be the hero. You got to be the hero of your own life. There's nobody else is going to show up, right? And so when you look at the news, somebody messaged me this week and they go, geez, man, how do you keep investing? How do you keep investing with all the bad news that shows up on TV? Inflation, supply chain issues, government crackdown on tech, all these things. And I really, I remind myself that there's always been bad things going on. And at the end of the day, I'm willing to bet on America that we'll figure it out. Right? So at the end of the day, when times look horrible, I'm betting on America. There's a lot of really smart people that we will be able to figure it out. So I hope that helps you. I hope that's something that you can kind of listen back to and just remind yourself. But you have to invest in yourself, and you have to be the one that pays the price. And there's no get rich quick schemes. They don't last. Right? It's that difference between being rich and being wealthy. You got to figure out how to make money while you sleep so that you don't have to work every single day of your life. Trading time for money, that sort of thing. So much shorter episode this week. I appreciate y'all putting in the time to listen to an hour of that interview last week. I hope that was valuable for you. I'm working on a couple different episodes I'll just share with you here. Working on, obviously, more interviews, some more people that are experts in real estate, burnout and a couple other topics that we've discussed, trying to find some value to bring to you. But also I've had some want or some ask of more detailed podcasts about how I look at investments. And so I've thought about doing an episode on kind of the main points that when I'm looking at a company's financials, like just doing a podcast just on a balance sheet, and then one on the income statement, and then one on the statement of cash flows, which I know for some of you are going to be like, oh my gosh, like that's way too in depth. But I think it could also be good. I mean, I think that there's always, when you listen to one of these, if you can take one or two things and you can apply it or it makes you a little bit better, then that's really what I'm looking for. So the number one thing that I can help you do is to become smarter, become more aware, be more consistent with your investing. And if I can help you do that over the next 10 years, it's going to have a dramatic impact on you. So that's what we're going to do. Some of the future episodes we're looking at. Obviously, you've seen a big move in the content. If you're following us on social media, got a great team working on all that stuff. No, that's not me. I'm not going to take credit for that. That's the Reaching Dreams Agency, and I'm super appreciative of all the help and time that they've put into that. So anyways, I appreciate you joining me again. Have a great week, everybody, and I'll see you next time.